Hello and welcome to your daily dose of Satoshi's news. Today's date is Sunday, the 26th of June 2022. Without further ado, let's just jump straight into it. BuyBSV.live, the best place to buy Bitcoin SV online, the original protocol and genuine Bitcoin. Right, here we go. Let's have a look at this news then. So first of all, we've got a Cointelegraph here saying that small-time investors achieve the 1 BTC dream as Bitcoin holds $20k range. Honestly, how pissed are you going to be when you realize that you spent 20k on a piece of shit? And oh my goodness me, what? 20k could get you almost, whoa, let's figure this out. So we've got, let's say Bitcoin is like $63 right now. Let's do that. Here we go, calculator. I'm going to work this out properly. 20,000 divided by 63. Oh my god, that could get you 317 genuine Bitcoin. Can you imagine? 300 Bitcoin. 300 Bitcoin. And these guys are celebrating because they got a SegWit protocol for 20k. How pissed are they going to be when that goes to zero and the genuine Bitcoin absolutely rockets past 20k? And they could have had 300 of them. This is just absolutely hilarious. I mean, like, literally, you know, you're talking about Darwin Awards here. You know, we are watching it. Good grief. So, with BTC recently trading at $20,000 range for the first time since 2020, small-time investors have found a small window of opportunity to achieve their dream of owning at least one Bitcoin. No, that is misrepresentation. You're passing it off. BTC is SegWit protocol. Bitcoin is BSV. Oh dear, Cointelegraph, passing the wrong protocol off. Ever since early Coolcoin BTC, investors woke up millionaires as the ecosystem gained tremendous popularity. Alongside the mainstreaming of the internet, investors across the globe have been in a rush to accumulate as many of the 21 BTC, one Satoshi at a time. With BTC recently trading at $20,000 range for the first time since 2020, small-time investors found a small window of opportunity to achieve their dream of owning at least one Coolcoin SegWit protocol BTC. On June 20th, Cointelegraph reported that the number of Coolcoin wallet addresses containing one BTC or more increased by 13,000 in just 7 days. Oh dear, oh dear. While the total number of addresses holding one BTC SegWit protocol saw an immediate reduction in days, reduction in days to come, the crypto community on Reddit continues to welcome new crypto investors that hodled their way to becoming a whole coiner. Dear oh dear, yours for $63 and they've been spending 20k on this. They are gonna be pissed. Redditor R Blessed was our ballast 22 who shared the above screenshot revealed that it took him around $35,000 in total to accumulate one BTC over several months since February 14th 2021, showing a bit of love for himself there. Oh dear. Showing further support for the Coolcoin ecosystem, the Redditor aims to continue procuring Satoshis or Sats until he accumulates over 2 BTC. Oh dear, if you want genuine Bitcoin, 2 Bitcoin will cost you $126. Dear oh dear. Dear oh dear. I mean, I kind of wish I could be a fly on the wall when they realise, but you know, it's not like I'm not exactly doing my best to try and inform everybody, is it? Do you know what I mean? They should be listening to my channel instead of closing themselves off, listening to all these clowns, you know, getting them to waste their money on Ponzi schemes. Dear oh dear. Check this out. Goldman Sachs leading investor group to buy Celsius assets. I mean, what are they going to do with him? What are they going to do? So Goldman Sachs is now going in for Ponzi schemes, is it? Like, seriously? The Wall Street firm is seeking $2 billion in commitments from investors to buy distressed assets at steep discount if the crypto lender goes bankrupt. Oh dear. Goldman Sachs is looking to raise $2 billion to what? Pour into this Ponzi scheme? From investors to buy up distressed assets from troubled crypto lender Celsius, according to two people familiar with the matter. We all know how Goldman Sachs works. Honestly, they will say anything, just to get people to buy their products. It's a bucket shop, pretty much. It's outrageous how these banks work. Good grief. Next one, BCH News says a string of 200 sleeping bitcoins from 2010 worth $4.27 million moved on Friday. Now we're talking. What is this? So while the price of core coin BTC is holding above the 21k per unit range, 4 Bitcoin block rewards mined in 2010 were spent for the first time in over 11 years. The 4 block rewards were mined between September and October 2010, and the 200 Bitcoin worth $4.27 million were transferred to an unknown wallet. 4 consecutive block rewards spent on June 24th. Data suggests spends were executed by a single entity. A large number of so-called sleeping bitcoins has woken up from slumber as 4 block rewards were spent at a block height of 742,183. The old coins spent on Friday were block rewards mined on September 15, 16 and 26 and October 29, 2010. During that time frame, core coin miners received 50 BTC for every block found, in contrast to the 6.25 BTC per block reward miners get today. The block rewards moved came from 4 addresses that include, and they got the address wallets there. The 2010 spends were caught by the blockchain parser btcparser.com, and in all 4 addresses, the owner did not spend the associated Bcrash and BSV, as those coins still remain idle. So I guess somebody's going to be aiming at BTC to start with, and then possibly maybe aiming at BCH afterwards. Just to finish it off properly, if it needs to. Blockchain explorers show the 200 virgin bitcoins were sent to a single address, and the coins remain idle at the time of writing. A consecutive number of 2010 block rewards spent in the same block suggests a single entity was likely the owner of the block rewards. The bitcoins mined in 2010 over a 2-month span, September to October, also suggest the spending was executed by a single entity. Well, I've got a pretty good idea in mind as to who that might be. Transfers had low privacy ratings. Sleeping Bitcoin string spends from 2010 have slowed. It seems as though the addresses were swept, and the transactions have a very low privacy rating for various reasons. Blockchain.com's privacyometer indicates that the final consolidation into BC1Q92 had a privacy score of 0 out of 100. So somebody clearly wanted to see the transaction taking place. The transactions contained vulnerabilities like matched addresses, co-spending, and the same addresses used in multiple inputs. Maybe the owner wanted them to see them being moved. There haven't been many strings of 2010 blocks rewards spends since the 2010 Mega Whale appeared months ago back in March. The 2010 Mega Whale usually spent strings of 20 block rewards from that a year all at once. Prior to the string of 4 block subsidies from 2010 spent a week ago, the address 1Li8RF spent 50 Virgin Bitcoins, and 1LNQDK spent 50 BTC from 2010 around a month ago. Wow. Well, I think someone is gearing up to do something with BTC, if you ask me. That's what I think. Not mentioning any names, but we've got a good idea. Check this one out. So this is by Decrypt. As Tether faces billions in redemptions, Circle's USDC is gaining ground. Tether's market cap has dropped by 19% since the start of May, while USDC's has climbed by 5%. During a crypto winter, investors tend to stash a portion of their bull market gains in stablecoins to wait out the downturn. But over the past 2 months, through Terra's UST stablecoin collapse, panic over a potential bank run at crypto lending company Celsius, and insolvency for crypto hedge fund 3 Arrows Capital, that bearish behavior has played out very differently for 2 largest stablecoins by market capitalization, Tether USDT and US dollar Circle coin. while Tether's market cap has lost 19% since the start of May, when it set a new all-time high of $83 billion. Where did that come from? Out of nowhere. USDC has gained 5% and hit all-time highs of $56 billion, according to a decrypt analysis using CoinGecko data. This means that Tether's supply has been rapidly shrinking since May, a sign that large investors have been cashing out their USDT positions since the market crash, while USDC supply has increased, suggesting increased demand. It's been a remarkably strong run for USDC. Over the past 50 days, Circle stablecoin has set all new time highs 28 times. In fact, it's done so every day from June 15th until yesterday. On Tuesday afternoon, the gap between USDC and Tether had shrunk to about $12 billion. That's the smallest it's been since the fall of 2020. Now USDC could pull even with Tether if its market cap grows by roughly 21% sooner if Tether continues to lose ground. But this all carries a very serious caveat. It is hazardous, especially now, to assume that an asset's past performance guarantees what it'll do in the future. Stablecoin, who cares? Honestly, I really can't be bothered, with all this crap. Oh, who cares? Honestly, who cares? Kind of interesting, but check this out. So, Dun One, Stable One, that's kind of funny. Play on Doke One from Tether Luna, says here, don't know if this is true, but Tether is near imminent collapse with some holdings in Russia sovereign debt that is long dated. Internal Coinbase report acquired from Tether showed $250 million worth of Russian sovereign debt currently held. Additional $500 million in Russian debt was sold on the 21st of June 2022. Says internal documents on their way via Proton Mail and will be posted unredacted for all those to see when I choose to do so. Oof, who knows what's coming? Who knows what's coming? But it's not good. I mean, we know what's coming, but it's just a case of when, really, isn't it? Check this out. Goldman Sachs looks to buy Celsius asset for $2 billion. That is advised to file for bankruptcy. Doh! Yeah, it just done that one anyway. Check this one out quickly. SEC chair seeks formal deal with Commodities Futures Trading Commission for crypto regulation. The Securities and Exchange Commission chair has been pressing for control over the regulation of crypto trading, which is a new bill seeks to entrust entirely to the CFTC. US Securities and Exchange Commission Chair Gary Gensler has sought a formal cooperation between financial agencies to regulate the crypto asset effectively. One rulebook for crypto trades. According to a news report in the Financial Times, Gensler said that there should be one rulebook so that bad actors don't make use of regulatory gaps and perpetrate frauds and manipulations. To this end, the SEC chair said he was working on a memorandum of understanding, as if he understands it, between the SEC and the CFTC towards bridging potential regulatory gaps. Gensler used to be the CFTC chairman from 2009 to 2013, so he should know, really. But I guess he just doesn't understand consensus mechanisms. Otherwise, he would realize that the entire crypto market is an utter scam. He just clearly hasn't figured out yet, really. Oh dear. Check this out. Coinbase to launch first listed crypto derivatives product. They can probably go into derivatives because on a derivatives exchange, for example, like DXS, the creators of the exchange do not or benefit either way if traders win or lose. So they are in a completely neutral position, and you can do that with derivatives. So maybe that's where Coinbase is planning on going. Who knows? Just speculating, because they are not doing very well at the moment with their share price down over 80%. Oh dear. Check this one out. So I just saw this. I thought the title looked interesting. Uniswap surges 45% as trading fees surpass Ethereum. Uni jumped and leads 45% through the last 7 days to $5.46, touching its highest level in over 3 weeks. The token has now. The largest DeFi exchange by daily volume saw fees paid by traders to the exchange jump by about 25% through the week to peak at $5 million a day. Who cares? Like, honestly, I cannot be bothered with this Ponzi shit. Like, literally, people can't see past the end of their noses. It's so ridiculous. They are Ponzi schemes. Somebody's going to get out. Well, you know, other people are going to get wrecked. It's absolutely ridiculous. It's illegal. Just stay away from it. But 15 minutes, there we go. We'll leave it there as ever. Be aware, take care, stay safe out there, and I'll see you in the next one. Hope you enjoyed the show.